All right. What is going on? Future me, hope all is well. I just want to go through my plan for this coming week as I do every week. And just to jump straight into it, I do have the dollar, the daily for the dollar pulled up on the screen. And so just to refer back to my previous pre-market plan, I did mention that I was waiting, softer numbers across the board for not only advanced GDP but especially PCE numbers, and it looks like they came in as expected. I believe it was at point 0.3 or something along those lines. And as we can see, very weak close for the dollar. And I do want to highlight there are a couple of big news events for this week. Obviously, with it being the first of the month, we do have or rather the first week of the month, we do have NFP coming out. We also have ISM PMI for both services and manufacturing. Jolts coming out, and then unemployment claims on Thursday. I do want to say this week is going to be a little bit more centered around the dollar just because there are a bunch of JPY and GBP holidays on Monday, Tuesday, Wednesday, and Thursday. Tuesday to Thursday for JPY specifically, and then Monday being a GBP holiday. So I am not calling necessarily for volatility on those two indexes, GBP and JPY, but with all of the catalysts for volatility with the dollar, we could expect, a couple of different things to play out. So with that, obviously we have all the fundamental drivers to act as, again, catalysts for volatile price action in either direction. Looking at it from a technical perspective, as I mentioned in my previous pre-market plan, we still have this descending triangle being formed, and it is still sort of squeezing in this descending channel. As I mentioned in my previous pre-market plan, I'm not really, calling for anything out of this world unless we do get a break of this descending channel and a reclaim or at least a touch of the 102 sort of 47 area, 102.50 sort of area. I don't want to rule out the fact that, again, this is still a level of support at 105, or rather 101, sort of 101.50 sort of area. And so with that, I mean, we haven't broken down from this level just yet, although this, descending triangle does hint towards that. I want to highlight that, again, support is always going to be support, regardless of how I feel about the dollar being weak and wanting to see continued dollar weakness. So I just want to highlight that. Obviously, I don't have a crystal ball. I am still expecting, and my overall sentiment is that we are going to see continued dollar downside, especially with the PCE numbers. I did mention in my previous pre-market plan that I was expecting softer PCE numbers, especially since we saw inflation drop just a little bit to 5% this last CPI print. And so that's exactly what we saw. And so across the board, even with advanced GDP, they came in a bit softer as well. So with that, you would expect further downside for the dollar with all of these different drivers sort of signaling towards that. We also have a rate hike this week, FOMC on Wednesday. So as we know, I feel like I cover this every time we have FOMC coming up. As we know, typically when rates are hiked for the dollar specifically, we do see a quick pop in the dollar. So I wouldn't be surprised to see a little bit of upside early into the week, or rather midweek when those numbers print. But thereafter, there's always increased dollar downside because of the overall sentiment around the actual rate hike. Of course, having higher interest rates and higher yields on the dollar is great. But when you factor in the narrative that the entire purpose behind these rate hikes are to deflate the dollar, get a handle on inflation, this whole thing, it ends up turning into a weaker dollar. And we've seen this time and time again, and I wouldn't be surprised to see it once more. I believe it's going to be a 25 basis point, or rather basis point rate hike, 25 point hike, And so that's what I'm going to be expecting into this week. Obviously, we'll have the Fed, Jerome Powell speaking at 2:30 on Wednesday and everything else. So that'll be juicy. That'll be very fun to take a look at and hear. And so with that, once again, I am still of the sentiment that we'll see further dollar downside, especially with the economic drivers and everything else acting as a catalyst. And so when I look at this on the weekly time frame, I can't rule out the fact that, we are sort of rejecting downside here on, just from a weekly sort of perspective. We did wick into that 100 level, which is something that I outlined in my previous pre-market plan as well. But we also have this little sort of microstructure here as well that we also highlighted on the daily around 105, or rather 101.50, 101.25 sort of area, forming a little bit of a rounded bottom, right? Signaling almost a retest of 103 before further downside. But again, I do want to use the daily time frame to add a bit more context around that. I wouldn't even think to suspect a further retracement until we sort of break this descending channel, right? Until then, I am still of the sentiment that it's a descending triangle, right? So typically when these patterns break to the downside, we have the measured move into sort of 100, sort of 99 sort of area, which is what I highlighted in my previous pre-market plan. And so that's what I'm expecting into this coming week. Again, I just want to make the observation that we are still at a level of support on the daily, and then obviously this microstructure on the weekly, rejecting that last week. But again, still of the sentiment that we should be seeing further downside for the dollar. I can even fib this out as well, right? Look at this from the, we can look at this from the weekly sort of perspective, and we can take it from the swing high to the, take it from the swing high to the swing low. Where do we end up? Not a ton of context, honestly. Not a ton of context when it comes to the weekly fib just yet. Once again, looking more toward the daily for this particular channel break and move into 102.50. If that's what we're going to do from a retracement sort of standpoint. Other side of that, I'll be waiting for the breakdown of 101.25. And again, with all of the news coming out, that can definitely act as a catalyst for volatility to the downside. Hope that makes sense. And so we ended the month off, once again, I mean, bearish to me, right? From a monthly sort of macro perspective, I would expect continued downside for the dollar, as I've mentioned in every period, or every pre-market plan up to this point, just with the overall narrative around the rate hikes, getting a handle on inflation, this whole thing. I mean, I feel like, sure, short term we could see, pops in the dollar, this whole thing. I've even seen, not to talk shit, but there are a bunch of people on Twitter as well expecting some sort of bounce for the dollar when, macro, fundamentally speaking, we should be seeing, a dump, not a dump necessarily like super crazy or anything of that sort, but we should be seeing further downside with the overall narrative around, again, getting a handle on inflation, raising rates, and seeing the dollar deflate as a result. And so again, when I look at this on the monthly, this is still looking pretty bearish for me. Once again, as far as the candle is concerned, right, obviously I would love to have a more of like a solid body close, not the best sort of wick when we want to see continuations to the downside. But once again, we have not reclaimed 103 from a monthly sort of perspective, and in many respects, I feel that again 100 sort of 99 area is programmed. Even if this was a bullish scenario, we still need to retest the previous level of structure that we broke out of, and that would be, again, that sort of area between 100 and sort of 99, 97 sort of area. And so that's that on that. Expecting, again, continued dollar downside. I'm going to be using the daily as sort of a contextual framework, so to speak, to preempt some of those moves, right? Again, I'm waiting for the breakdown, this playing out of this descending triangle, or if we are going to retrace, I need to see some sort of movement around 101 or 102 sort of 50 reclaims of that level and everything else to really factor that in. And so with that leads me into JPYBasket. And as you can see, like, this played out perfectly. As I mentioned in our previous pre-market plan, there were a couple of different scenarios. Obviously, the first being just a continuation to the downside. We did highlight this rounded bottom here as well around the previous levels of support around 77.50. I did mention that we do have this level of resistance in confluence with the 618 that we could definitely tag. That's exactly what we did. And then thereafter, we ended the week off with the monetary policy statement from the Bank of Japan. And as we know, there is a new governor for the Bank of Japan, Ueda, and he hasn't changed monetary policy a bit. He mentioned that they don't want to change monetary policy just yet. They would entertain it sometime in the future. And there have been monetary policy statements and press conferences in the past basically saying like, hey, if we raise rates now, we're going to break our economy. So they're in no position to raise rates just yet. They're still in negative rates. They're still printing a bunch of money, and they're still using that money to buy a bunch of bonds, I believe 10-year bonds. And I feel like I mentioned this in the past as well, but a very high percentage of the Bank of Japan's GDP and just Japan's GDP overall is stemming from their bond purchases. So obviously the yen is not in the best spot as a result. And so my overall sentiment is that we continue to see yen weakness. Obviously, this ties into the fact that the Bank of Japan has mentioned multiple times that they do sort of benefit from a weak yen, and of course, they'd want to keep it that way. And so, what better way to showcase that than to see further downside on the yen, right? I can delete this fib as it stands, and so obviously the way that the chart is looking looks like complete shit. I would expect a continuation to the downside. We can get like microstructure retest of 77.62. Would not rule that out whatsoever. But again, when you see a candle like this, huge rejection to the upside, solid body close, no lower wick. I mean, that's a huge amount of momentum to the downside, and I would expect again further downside for the yen, especially with the monetary policy statement release. It hadn't changed anything, like not a single thing. And so it leads me into the weekly. And obviously, hindsight is 2020. But when we look back, right, I highlighted this in my previous pre-market plans. The technicals when it comes to the end, absolutely beautiful, right? We have the double top. We have obviously this trend line structure here as well that we've broken out of previously in confluence with the range high and everything else. We're now breaking through this sort of range mid, rejected it, right? Like huge rejection of that range mid. And now we're moving into, obviously what would be the most likely area to move into, 75.20, this range low. Also adds a ton of conviction and context to that is obviously we have this double top. The measured move of that double top breaking this neckline, it brings us straight into that range low. And so that's exactly where my target is for the yen. Pretty simple and straightforward. I don't think there's anything really crazy for me to cover here. Obviously, I would not be, I'm not going to be looking for any sort of upside when it comes to the yen unless we reclaim this range mid and play back into the range high. Otherwise, obviously, the range low is programmed. Like that's, again, my overall sentiment is that we're going to see continuations to the downside for the yen, at least into this range low, right? That's just what it is. That's what it's looking like fundamentally. That's what it's looking like technically. And so I'm going to run with that until I see otherwise or hear otherwise. Monthly, same thing, right? Monthly looks like complete shit. Very, very clean from the perspective of, we did get this swing high to swing low rejection of the 618s. Obviously in confluence with the weekly structures and daily structures that I just highlighted. And so we do have a sort of near-term level of structure here at 76.50. Again, with the amount of steam on this candle, the amount of momentum that we're seeing to the downside, I would not expect us to necessarily bounce from any of these levels. Could also call this like a lower high, looking back, like looking left and everything else. So once again, I am of the same sentiment as I have been for, for weeks when it comes to the end. Expecting continued downside. This is actually one of the quickest, analysis of the indexes I've done in any previous pre-market plan. Just because, again, it's so clear to me. Like, this is, how could you, And again, I did highlight this again. How many times can I say I've highlighted this in my previous pre-market plan? Regardless, I did mention that a lot of the time we see markets move in like martini glasses and then thereafter reverse martini glasses, and that we go up, we go consolidate to the side, and then we make the big leg down. Obviously we see the big leg up on the left side, so I would not be surprised to mimic that on the way down, right? Even as far as 71.50 sort of area, would obviously need to see structures break on the weekly and monthly prior to confirming that. But again, with the way the chart is looking, with the way that the fundamentals are sounding, I would not be surprised to see us, get as low as previous lows. And so, kind of good news as well. While we've seen this yen weakness, we've also seen GBP strength. I did mention in my previous pre-market plan that the bullish scenario for the pound, and obviously wanting to keep these two indexes decoupled, the ideal scenario would be to see the yen weakness and then see us build a base on top of 124 when it comes to the pound and make a move to the upside at least into 126 or higher than that. And that's exactly what we've seen. I can also draw this sort of little channel here. Boom. Looking very clean. Let's move that. And so with that, right, we've even broken local highs, not only the local highs at 124, but the local highs that we printed around 125 sort of area. Most recent daily candle closes looking very strong to the upside. We do have that next level of resistance at 126.37. We are going to see that tested without a doubt. And, I'm going to say, right, when I get into JPY or GJ, it is looking a little bit overextended. So I would not be surprised once again to see like maybe a bounce off of this level of resistance at 126, at least test it one time before trying to get back up there and break it. We are sort of, in that scenario, we would be at the mercy of this range between 124 and 126. Obviously, reclaims below 124 are bearish for the pound, and I'll have to start reevaluating my analysis around wanting to get long on GJ. But when I look at it from the perspective of, okay, we have this 126 resistance. If we tap it and reject, that makes perfect sense because once again, the GJ is overextended. I'm waiting on a retest to get into buys on GJ, right? And so that would align perfectly with the levels of structure that we're seeing on the pound at the moment, right? Unless we just power straight through it, that'd be awesome as well. But trying to be a little bit practical here and be, technically sound when it comes to these structures that we're seeing, right? So would not be surprised if we see something along the lines of this, right? We get the boom, boom, and then the move higher. Bearish scenario obviously being that, we reject this and move lower. But overall, of the sentiment that we're going to be seeing continued upside, I do want to highlight once again, as I mentioned in the beginning, that this week I'd imagine is going to be more centered around gold for me and the dollar, just because there are more news, catalysts and drivers, whatever you want to call them, around the dollar, and we're seeing a lot of bank holidays for both the pound and the yen. So I don't like to trade bank holidays personally, so that's kind of where I'm at with that. So looking at the weekly. Weekly is finally starting to shape up, in a bullish scenario. As I mentioned in previous pre-market plans, hundreds of times we do have this inverse head and shoulders that we're finally breaking out of. We still have this level of structure once again at 126 to break to confirm the sort of neckline break of the head and shoulders, just to be all the way safe, right? It's still in confluence with the 618 swing high to swing low, this whole thing. So I don't want to rule that out. We also have this descending channel, this trend line here. I believe this is from the monthly to kind of worry about. But if we can get decent strength and build a base on top of 126, I see no reason why we wouldn't see continued pound strength. I do want to highlight as well, when we were using, when we were printing a ton of money, a bunch of QE, quantitative easing, this whole thing, we saw that while the dollar started to strengthen, other countries outside of our sort of ecosystem, like the pound, like, obviously the yen and all these different economies, they started to weaken. Now that we're starting to see the dollar weaken, we're starting to see a lot of these other currencies and economies regain some of their strength. So, it makes perfect sense why we're seeing GBP strength. Obviously, they had their news and stuff come out, their CPI numbers and everything else come out last week that acted as, a catalyst for this move to the upside. But, again, with the dollar weakness that we're currently seeing, I wouldn't be surprised to see continued upside when it comes to the pound. And obviously, that's not the only example. That's not the only piece of context I want to use as a sort of a piece of evidence for further upside on the pound, but you can't rule that out, right? So looking at it on the monthly, very good, very strong monthly close. I remember mentioning earlier in this month that I wasn't sure how this candle close is going to look. Obviously, again, bullish scenario, we see a solid body close is exactly what we got. Solid body where we haven't solid body closed in a very long time above that sort of 124 area. So this looks extremely strong for the pound as far as the close is concerned. And as this sort of arrow states, I would not be surprised again to see this test of the structure around 126, between 126 and 128, more or less, retest and move higher, right? So that's again kind of where I'm at. Technically speaking, I will want to be looking more toward the daily and weekly charts for the pound specifically to see these specific structures around 126 and everything else break to confirm those moves to the upside. Once again, overall sentiment is that we see continued upside for the pound. We do have a local level of resistance at 126. I would not be surprised, and I would actually expect a rejection of that level of structure, play back into maybe 124, 125 before making a move higher. We also have this very fickle trend line, could be acting as an ascending triangle, or it could be squeezing before that big rejection of 126. We can take its low to high here as well. And measured move would take us into 130, breaking that 128 sort of level of resistance. And that, that descending channel here, this trend line here as well, this level of structure. Let's look at the quarterly. I haven't looked at the quarterly at all. Quarterly is looking pretty strong as well. We could be breaking this channel here soon. So just want to observe that. And so that leads me into the pairs that we'll be trading. I want to start with GJ. GJ has been in an absolute tear this week. Looks absolutely beautiful. just from a structural sort of perspective. And obviously, as we've seen yen weakness and GBP strength, this is exactly why we're seeing this sort of move, exactly why we're seeing GJ starting to trend, when both the pound and the yen, their indexes, their currencies, whatever you want to call them, when they start to decouple, when they start to move in different directions, we start to see GJ trend, whether it be to the up or to the downside, depending on what pair, or rather what currency is strengthening. Typically, when we see yen weakness and GBP strength, we see GJ upside. When we see JPY weakness JPY strength and GBP weakness is when we see GJ start to dump. It's when they're both moving in the same direction that we don't want to necessarily be in the market, because it starts to consolidate. It's such a chop up like we see back here. But looking at this from a weekly sort of perspective, huge momentum to the upside, the exact opposite of what we're seeing on, the yen, right? So very good example of what I just mentioned. And so, right, we just broke through a very respected, very strong level of resistance with much more strength than we saw back here, right? This is an insane amount of momentum to the upside, and I would love to say that we would get a retest of 168, and I'm sure we'll get it at some point, but I don't know if we're going to get it this week necessarily. It's because with the amount of steam that we're seeing on this particular candle, we have 175 as the next sort of level of structure from a weekly perspective. So, I mean, that's a big move, right? Was that like 500 pips? And also a local level of resistance here at 171, sort of 171.25 area. So there are a couple of levels of structure we need to potentially break through before we can reach 175. But I mean, I don't see why it wouldn't be in the cards. Another thing I want to highlight, this monthly cup and handle. How many times have I mentioned this fucking monthly cup and handle? Let me move this out of the way. It's looking like it's finally starting to play out, unless we get a big rejection, right? Even when we look at it from the monthly perspective, the last monthly candle in the month of October was not as strong as the one that we're seeing at the moment, right? So it definitely makes a case for further upside when it comes to GJ. And so as far as me wanting to get in and position myself in the market, I am wanting to wait on a break. Obviously, we got the break. I'm wanting to wait on a retest now to get in. And so measured move takes us straight into this negative 236 at 180. We also have this little level of structure. I guess you can call it like a level of structure around 177, 178 sort of area into 180 as well. But I mean, I'm really relying on that sort of 168 retest, right? This is going to be a sort of a bouncer break level as far as I'm concerned, because even looking left, right, we did poke our head above this level in the past, but we ended up reversing straight back down into the range lot 156. So I do want to be wary of that, but with the way the yen and pound are looking at the moment, one weakening and one strengthening into big levels of structure, big targets, I see no reason why we shouldn't see further upside for GJ. So that's my overall sentiment. I'm looking for buys. I'm looking for further upside when it comes to GJ. Looking at the daily, added some more context here as well. Let me move this out of the way. As we can currently see, right, we have a very well-defined local level of resistance. As much steam as this candle had going into Friday, we still could not break that level at 171, which to me spells it a ton of potential, a very big chance, for a retracement at least into 168 prior to making a move higher. Let's flip out the daily candle. Actually, let's just see. Right, so I mean that makes perfect sense. When I flip out just the daily candle overall, we still have the 618 at 168 and then the 786 at 167, sort of 50 area, which to me would be two great areas to get in on a retest when it comes to buys, right? If we start to reclaim levels below 168 and 166 sort of area, obviously I'm not going to get short just yet until we break 166 overall, but would not be looking good as far as buys are concerned. I want to see a very well-defined, obviously we have the break and then a retest on top of 168 sort of area to get long. Perfect opportunity to do that, obviously reaching a local level of resistance, but we could very well power straight through this and move into 175 as well. And, perfect way to add a ton more context to that is looking at the 4 hour. And so when I look at it from this perspective, obviously we have a level of resistance here at 170 that I've drawn, and then we also have the last week candle high in April high of this year at 171. Typically, and I've mentioned this in previous pre-market plans, typically when these levels of resistance stack on top of each other, these local candle high closures and candle closures overall, these weekly candle closures, when they stack up, they tend to be more respected levels of structure, right? So, especially with the way the most recent candle close formed, once again, it makes a very reasonable case for a retracement, a rejection of this level, retracement into 168 before further upside. I mean, when you see obviously big momentum like this, you have to get a retracement at some point. I mean, it can continue to go to the moon, but I'm still going to wait on a retracement rather than chasing the upside, right? Trying to buy the top of the candle, buying resistance, this whole thing. I've been there, done that. I'd rather wait for the retracement. And so with that, we also have coupled into this another level of structure, the 2022 high at 172. We have another level at 173, and then obviously that level I outlined on the weekly and monthly at 175. So there are a couple of ranges that we can play. Two bullish scenarios for me is obviously similar to last week. We'll build. Excuse me. Holy shit. We build a base on top of the April 23 high. We sort of consolidate here and make the move higher into previous ranges. We have now a sort of this is a range low, right? Or rather a range high, excuse me. But if we can claim this level, build a base on top of it, this would be the new form sort of range low between the range mid and range high at 173, and I would treat it as such. But being more practical, second sort of bullish scenario for me at least would be, exactly as this outline, or rather this arrow outline, excuse me. We have the bid push up, retracement into the June high at 168 sort of area. Obviously break, retest higher. Another area of interest could be this 167 sort of 76 area, also in confluence with the 786 I just outlined on the daily. Also the neckline here for this double bottom. So three levels that I'd be sort of looking for stability prior to getting long again. So once again, similar to like we saw in the 1 hour last week, and I'll cover that in a second. Building a base on top of 171 sort of area. This is a round number as well. So to some people that's important, just a small piece of confluence. Building a base on top of this newfound level, also this April 23 high, and moving higher into the new ranges, or much more practical for me, seeing the June high, the 168 retest, or the neckline for the double bottom retested before moving higher. I'm still of the same sentiment that I will be taking sells below 166. There are too many levels of structure in between that, between like 166 and 168 for me to want to get short, unless I see something crazy, right? And I'll outline that here on the 1 hour. So, as I mentioned, I want to highlight something very quickly. I mentioned in my previous pre-market plan, right, that we had this level of structure, right? This level of resistance. Also, again, as I mentioned in the 4 hour, we had multiple weekly candle closes here, forming a very respected level of structure on the chart. And so I mentioned that, obviously practical scenario, we see around the top here. I was waiting for a retest on top of 166. But the other scenario of that was the building of a base on top of the 166 sort of 80 area. Obviously, we have the break and retest of that level of structure before moving higher into 168. We could very well see the exact same thing here, although we are starting to lose momentum here with these candle closures. Does not look nearly the same. I mean, it looks a little bit similar, right? But not nearly as many dojis as we're seeing here, right? We could see the same exact scenario play out where we start to break into the April 23 high, building a base on top of it and making moves into 172, 174, 175 thereafter. But for me, again, we have three scenarios. The first being the building of the base on top of the April 23 high, move higher. And then the second being a little bit more practical of an approach for me is waiting for the December 22 high retest. More so, I mean, perfect world, honestly, I would wait for the 168 June high retest. And then the fourth, being that 168 flat retest. As we can see looking left, this is the initial sort of range high that we broke out of. So this would kind of be a neckline retest in many respects as well. Looking left, we've used it as resistance many times, and it would make the most sense to use that as newfound support, just structurally speaking. We could stop up short from that again. We do have this local 618 swing low to swing high around 169.50 area. Also the December 22 high, the 786, so I don't want to rule that out. But to me, that does look a little bit early. We could even extend out the fib from the initial news candle with this big wick right here, and adds a little bit more context for me, right? A little bit more practical. The 618 is lining up in confluence with 168 as well. So again, overall, perfect world for me, I would want to see the 168 retest before taking longs. But if I start to see rounded bottoms being formed around the June high 168.72, I don't want to rule that out. As far as my plan's concerned, I mean, the local 786 awesome, but I just don't feel right taking the taking buys on the top of the December 22 high. Two areas of interest that are more practical to me. Once again, I just want to highlight this: the June high at 168.70, and then more so at 168 flat for buys. Third scenario, a little bit more risky, would be building a base on top of the April 23 high, and moving higher than that. But as I mentioned when I was covering the GBP index, we are moving into that 126 resistance, so it would make a lot of sense to see a rejection of that level, break back into 124, and then making a move higher, which would line up perfectly with a retracement on GJ. So that's what I'll be looking into this coming week. Obviously, with the bank holidays, I don't want to take it too serious, because price action can be really wonky with holidays and bank holidays, this whole thing. But that's my plan when it comes to GJ. Two levels of structure that are very practical for me. First being the June high, and then the second being that 168 level of resistance. Obviously, looking left, we have levels of support or levels of resistance. Could be an SR flip into 168. Just makes the most sense for a practical retest and retracement of this particular move. So I hope that makes sense. Just want to make sure. And obviously, in the scenario that we build a base on top of this April 22 high, or rather the April 23 high and the November 22 high, I would be taking that into the 22 high here, about a 118 pip range. And then outside of that, obviously, again, waiting for the June high retest or the 168 retest. Hope that makes sense. And so for gold did not really do much this week. If I'm being completely honest, when I look at it on the weekly, obviously it's looking like it's losing a bit of strength, and we're continuing to retrace into the 1900s. But really, it's just a lot of consolidation for me, right? Monthly closed extremely weak, but still above the local highs, so can't make too much of it. Daily as well, just consolidating. Not, price action was like complete shit. And obviously with the dollar consolidating as well, it just makes a lot of sense. I'm hoping that with NFP this week and all these different catalysts and drivers, we can kind of make a move definitively to the upper to the downside when it comes to the dollar. I'm still of the same sentiment. I'm waiting on a reclaim of 2000. If I can get clear strength above 2000, I'd be in buys all day, every day. Otherwise, I'm waiting for the retracement into 1759, 1756 sort of area. 4 hour adds a ton of context. We do have a descending triangle sort of forming here as well below this newfound level of resistance at 2000. So once again, I mentioned in my previous pre-market plan that while we were using 2000 temporarily as support, we have now obviously turned it into resistance. We've rejected it many times. We still have that level that we're hanging on to by a thread at 1980 sort of area. And as you guys can see, and my future self can see, we've wicked into it many times. But we're just continuing to form lower lows, and or not necessarily lower lows, but lower highs, right? We're just squeezing lower, little by little, just, bleeding out. And so even just looking at it from a structural perspective, like looking at the pattern, measured move brings us into 1756 and lower than that. And so if we start to break 1780, it's not going to look good for gold buys. Obviously, again, for me at least, wanting to see the reclaim of 2000 to really start getting long. Otherwise, I'm going to be staying away. Looking at it on the 1 hour. All right, let me make sure that I covered all my bases here on the 4 hour. No, yeah. Once again, I mean, we had this bullish scenario of higher highs and higher lows. Obviously, the last higher low has been broken structurally, and we're now starting to form lower lows and lower highs. So, with that said, I'm just, again, of the sentiment that I'm waiting for I'm bullish above 2000 as it currently stands. Otherwise, I need to see structural integrity at 1756 or one of these range lows to really want to get bullish. Everything is pointing toward a bearish scenario when it comes to gold. I really need to see dollar downside to affirm that as well. And so when we look at it in the 1 hour, adds a ton of conviction, or rather adds a ton of context as well. I do want to highlight really quick on the 4 hour. I know I've done this a couple of times, but look at this very clean box of consolidation. Typically, like, you wait for a break to the upper to the downside to really understand where price is moving, like, definitively. And so yes, it's just one strategy that I'd be using into next week to help me understand where price will be breaking, whether it be to the upper or to the downside. And so the range becomes a little bit more well defined on the 1 hour. We have a sort of range low here at 1980 that we're holding on to by a thread on the 4 hour that I just mentioned, and then that range high at 2000. Maybe some people could maybe take the buys from 1980 into 2000, but I think that's way too risky. Like, not enough. I mean, again, like looking back here, rather obviously awesome. 1980 as resistance or rather 1980 as support into 2000 resistance. That's a great scalp. That's a great like short-term move. But just look at the way that it's just moving sideways. It looks absolutely fucking disgusting. The wicks, everything. It's not appealing to me. Obviously, this ascending channel got broken down. It's just not looking good for me. Even with the amount of downside rejection we're seeing at 1980, this level of sort of liquidity, personally, I'm not ready to buy this yet. Right? Like, it just doesn't look good to me. A lot of traffic looking left as well. I again would really need the reclaim of 2000, building a base, break, retest, and move higher to really be convicted in gold buys. Otherwise, I mean, we have so many other levels to look into. I don't like how this looks. Whether it be like 1970 or obviously the bigger level at 1959, 1960 sort of area. So pretty simple on gold, nothing super crazy. Once again, I'm still waiting on the reclaim of 2000. I will not be trading this range. I'm not gonna take buys in 1980. It looks like shit. I'm not gonna be doing that. 1959, I'd wait for a bounce, right? I'd wait for stability to be formed or a base to be formed on top of 1959, 1960 sort of area to even consider getting back into buys. But I mean, structures overall shifting, right? Like, again, 2000 has turned into a level of resistance. Until we flip back, I'm not going to be wanting to get into buys. Hope that made sense. Going back to GJ, we're very much overextended as far as price is concerned. Similar to what we saw last week, we could claim the April 23 high and move higher, but that just doesn't seem practical to me. Because price is so overextended, when we see big moves like this, it makes the most sense to see retracements back into previous levels of structure that we broke out of. Two of those levels being the June high at 168.75, and then the second more practical level for me would be 168. Perfect world, I would take 168 buys on a very nicely formed wick all day, every day. Otherwise, we have local fib levels here as well at the December 22 high, the 786, and then the 618 sort of 169.65 area. Those are a little bit risky for me. I would consider it. But again, perfect world, I'd wait for the June high or the 168 levels to get into buys. Just like this arrow sort of states. Let me see, make sure I'm not missing anything here. No, yeah. A little bit of traffic here looking left as well. But again, even looking at the chart from this perspective adds a ton more context around seeing the 168 retest. And as we can see with the higher highs and higher lows being formed, we do need to form a higher low at some point. We have a new high. We do need to see a higher low formed at some point, and I think the most practical area for that to happen would be the 168 sort of area. And so, yeah, that pretty much sums it for me. Future me, God bless you, bro. I love you. I hope you're, living your life to your utmost potential. Life is hard, but you're harder. Pause. And, God bless you. God bless everybody watching. And, take care.